Hey everyone, welcome back to Corporate Dakota. Today, S.B.M.T just filed an 8K reporting and underwriting agreement for their initial public offering. And I am seeing a key detail about how much they will actually net from this big event. Quick note, this is not financial advice, just my take on public filings for educational purposes. They are raising money to fund operations. But there is a significant chunk going to the Underwriters, which is pretty standard but worth noting. This filing is basically an announcement that Bow Mining Corp, or S.B.M.T, has entered into a material definitive agreement. In simpler terms, they've made a big deal that important investors need to know about. Bow Mining Corp is a company that is getting ready to start trading publicly, meaning its shares will be available for anyone to buy on a stock exchange. This event is their initial public offering, or IPO. The date of this report is the 29th of April 2026, and the earliest event it covers is also the 29th of April 2026. This tells us they are reporting something that just happened or is happening right now. The main focus of this filing is an underwriting agreement. This is a contract between the company and investment banks called Underwriters, who help sell the company's stock to the public. In this case, Cantor Fitzgerald and Company is acting as the lead underwriter. Bow Mining Corp is planning to sell 5.2 million shares of its common stock. In this IPO, think of common stock as the basic ownership units of a company. The underwriters, acting on behalf of Bow Mining, will buy these shares from the company and then sell them to investors. This is how the company gets the money from the IPO. They've also given the underwriters an option to buy up to an additional 780,000 shares. This is often done to cover unexpected demand, a situation known as over-allotment. If investors want more shares than initially offered, the underwriters can buy these extra shares from the company to fulfill those orders. This is good for the company as it means they could potentially raise even more money. Now, let's talk about the cost. The company agreed to pay the underwriters a commission of 7% of the total money raised from selling the shares. This is a pretty standard rate for IPOs, but it means a significant portion of the money raised won't actually go into the company's pockets. For example, if they raise $100 million, $7 million will go to the underwriters as their fee. On top of the commission, Bow Mining will also cover other expenses for the underwriters up to $200,000. These are typically things like legal and administrative costs associated with the IPO. Interestingly, they mentioned that the registration statement for this IPO was declared effective on the 29th of April 2026. This means the SEC has reviewed and approved the company's plan to go public. The filing also states that on May 1, 2026, the offering was completed. They issued the 5.2 million shares and received approximately $54.6 million. This number is after deducting the underwriting discounts and commissions and other expenses. So, while the gross proceeds might be higher, the net amount the company actually gets is $54.6 million after paying everyone involved in selling the shares. This section just details the exhibits included with the filing. The most important one here is the underwriting agreement itself, which is filed as Exhibit 1.1. This exhibit is the actual contract, the underwriting agreement. It contains all the nitty-gritty details of the deal, including promises made by the company, conditions that must be met before the shares can be sold, and how any disputes will be handled. This is a standard exhibit for IPO filings, making the information more accessible for digital analysis. Now, looking at this filing from a broader perspective, Bow Mining is clearly in the process of becoming a publicly traded company. They are raising capital, which is essential for a mining company to fund exploration, development, and operations. However, the 7% underwriting commission is a significant cost. If we look at their market cap of $317 million, and this is a fund raising from barely a year ago, it is interesting to see how that has evolved. This $54.6 million net proceeds from the IPO is a crucial injection of cash. The fact that they've opted to use the extended transition period for new or revised financial accounting standards, indicated by the unchecked box, suggests they might not be in a rush to adopt the very latest accounting changes. This is something to keep an eye on, as it could mean their financial reporting might lag behind some industry peers. What I find most interesting is the discrepancy between the headline numbers and the net proceeds. They are going public, which is a huge step, but understanding how much cash they actually keep after fees is vital. This $54.6 million is the real fuel for their operations. Given they have only 12 employees, this capital will be essential for scaling up their activities. The risk I am watching is how effectively they deploy this capital received from the IPO. Historically, many mining companies, especially those at the exploration stage like Bow, struggle to translate new funding into successful operations and shareholder value. The market cap has grown significantly since the IPO, so the market clearly has faith. But execution is always the key. What I am actually looking for is how this $54.6 million translates into tangible progress in their mining projects over the next few quarters. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Join our Discord community, link in description.